to today's Q&A section. The first question today comes from Lamar, and this is regarding silver after the pullback that we've seen over the last 24 hours. A little bit of an explainer for that and really what to look at the moment. So you're quite right. Silver has, as we've been anticipated, alongside gold and platinum, it's seen this end of month profit taking, end of quarter profit taking over the last few days, particularly accelerating, in fact, on the very last day of September. So what you tend to see with the price action here is as we see profit taking start to escalate, stop losses start to get hit, and then what you see in the market is some traders are getting margin called. This causes further liquidations, and with that you get a more significant correction than perhaps you've been anticipating, which can set up for some great buy opportunities if you're aware of it and if you plan for it beforehand. So if you consider that silver was trading around $19.60 over the month of September, and as of the 1st of October it's broken back down towards $17, the risk to reward now is quite favorable for the long side again here. Now, usually over the final quarter of the year, again, silver, gold, they do perform very well, and especially in the first week as well. We've got first of the month buying coming back in, and also we've got first of the quarter buying coming back in too, which we're seeing very clearly on the chart just behind me at the moment, with silver climbing back above $17 per ounce. Now, the gold to silver ratio is currently trading at 85-80 to 1, and in fact it's starting to roll over and sell off, which does suggest that in the short term silver is going to outperform gold over the course of this week. We've started to establish positions at these levels, and we are looking for more upside as we continue throughout the week, and we just see that usual flow come back into the market after quite a significant sell-off that we've seen right at the end of September. So we're looking to capitalize on this pullback on silver. Much better to be buying silver, for example, around the $17 after a very significant correction, rather than FOMO in, get the fear of missing out and start buying it above $19.50 or at $19. You really want to be patient. When you're patient, you often do get the levels that you would like to enter into trades as long as you can wait. Our next question today comes from Matthew, and that's with regard to whether we feel gold and silver will get the safe haven bid over the course of October, as we've seen throughout the summer months. So it was very interesting. In fact, on Monday, we didn't really have any geopolitical risk. And with that, we have seen pressure to the downside on the metals, gold and silver in particular. But of course, you know, that can flare up very quickly. So geopolitical risk, particularly more recently between the US and also Saudi Arabia and Iran, has very quickly seen gold catch a bid, silver as well, and also crude oil. So you do need to have that on the radar. As we progress throughout this month, we have the FOMC statement later on in October, also November and also December, where the Federal Reserve, there's anticipation that they will go ahead and cut interest rates, but we want to get more details and more future guidance on that on Jerome Powell's speech, which is a little bit later on this week on Friday. It's interesting because Jerome Powell's speech is going to be after non-farm payrolls, so you want to look out for that. And when you do see markets a little bit quieter at the moment, where you don't have that geopolitical risk in the background, this is where you can see the metals under a bit more pressure right now. That said, we have seen quite a considerable increase in the overall net long positions with gold in the latest week. Not as much with silver, but a big increase in both gold and also with platinum from hedge funds and money managers. So these are actually at the highest levels from funds buying into the precious metals at the same levels that we saw when gold broke above $15.57 and when platinum hit $1,000 per ounce. And platinum at the moment is trading around $890, and of course gold is currently around $1,470. So it tells you the smart money in the market is certainly buying into these dips at the moment. You definitely want to watch out for the potential for that first quarter buying to come in, which we're already seeing today. First day of October, you can start to see the flow change. So of course, again, as I mentioned, Mondays can often be counter flow, and you want to be aware of that, because many traders, they start getting into positional trades on a Monday, particularly retail traders. They get into a bunch of positions which their overall trading systems might signal them to do so on a Monday, only to then see the whole flow of the market change from Tuesday onwards, as we start to see more institutional money come into the market, bigger volumes, and the real moves and smart money becomes much more evidence in the market. We'll go through that with oil very shortly as well, but essentially with respect to geopolitical risk, yes, you do need to watch out for that. If we do see anything escalate, especially given that the trade war tensions at the moment have started to dissipate a little bit. But as we start to see things heat up, we saw that again on Friday with Donald Trump's comments with regard to delisting some of the Chinese companies from the US exchanges. And with that, gold immediately caught a bid and broke back above 1500. So all of these points you do need to watch out for. You need to be very aware of geopolitical risk. You need to watch out for the narratives and the rhetoric from the Federal Reserve, especially later on this week on Jerome Powell's speech. And of course, Friday's non-farm payroll at 1:30 London time should absolutely be in your diary, because that can provide a catalyst for some really big moves. So with that, that has been gold and silver asset of the day, and I wish you good trading.